right, today we're back with day number 5 or option number 5 of how to get started in real estate investing. Now, this is actually, shall we call it a loophole in the tax code that can work in multiple ways, especially if you own a business and maybe have a year that you have a higher income and your accountant says, hey, you're going to be hit with a larger than normal tax bill. You need some more tax deductions or some write-offs or some business expenses to lower your taxable income as a business. So now what I'm going to walk through is an option that if you are currently a homeowner, you can get some additional income tax-free. And if you are a homeowner and you own a small business, you could potentially get some additional income and additional tax write-offs and pay less in taxes. So what is this loophole? Now, I'm not an accountant or a tax advisor or anything like that, so I couldn't tell you this is section 2358 subsection B or anything like that. But this is basically how the loophole works. We're just going to say that you own your property. And we'll put you here. And for purposes here, if you own a business, of how this works. But you don't necessarily have to own a business here. This is just a way to get started with real estate investing, potentially using what you already have for some tax-free income. So what is this method or what is this loophole? Now, you may have heard of, short-term rentals, Airbnbs, VRBOs. Some people even rent out their home. Maybe you take a 2-week vacation every year with the family, or maybe 2 one-week vacations. And during that time, your house is vacant. And, this might not work for everyone. Some people are leery of this and just don't want people in their homes. But I'm just letting you know that this is an option for you. So for your primary residence, the IRS allows you to rent it out 14 days in a year in a 365-day period, 14 days, and that income is tax-free. So let's just kind of go through some options that are available for this. Now, I've heard some people do this for Sturgis. Say they have a home, maybe not right in the heart of Sturgis, but within reasonable driving distance that, they can rent out their home for, I've heard thousands of dollars a night, even just with the supply and demand. But let's just keep this a little bit more reasonable. Let's say a short-term rental nationwide. Let's just start with that you can rent your home for $500 a night. And just to do your due diligence, we can say we've done a due diligence that short-term rentals of primary homes of similar square feet, bedrooms, amenities, maybe your house is a pool, a swim-up bar, whatever the case may be. But you can basically prove to the IRS that you rented the house for $500 a month, and that is a reasonable rate. That is the going rate for your area, and this will particularly play an important part later. You can rent this for $500 a night, up to 14 nights. So that comes to $7,000 gross, tax-free. No income taxes, no FICA taxes, no nothing. Now, depending on which jurisdiction you're in, there may be some state and local taxes potentially with that, but as far as the federal taxes are concerned, the IRS allows you to rent out your primary residence up to 14 days, no longer than that, but you can do less than that, up to 14 days, and that rent for 14 days or accumulation of 14 days is tax-free. Now, this doesn't have to be 14 days in a row. This can be 1 day here, 3 days here, 5 days here, whatever. It's just the total number of nights cannot exceed 14 days. So just for an example, we gave 14 days at $500 per night or day, gives us $7,000 in tax-free income. That's already utilizing our primary residence. Many times we already have some tax deductions in place. You can get a homestead exclusion for your property taxes. Maybe you have a home office, you have some deductions there. You can write off the interest of your primary mortgage, maybe some local taxes. There's some benefits to owning a primary home. But this is one avenue to get 7,000 or whatever the number is. The key point is up to 14 days total in a year that you can rent it out, and that money is tax-free. IRS gives you that blessing. I don't believe there is any higher limit per se. I think it just has to be more of, say, arm's reach. So if you have a highly desirable house, maybe it's a huge mansion, and it is rented out to complete strangers you don't have any family affiliations or anything with, and maybe you get $2,000 a night. As I understand the tax code, you could even do that for, well, that come to $28,000 a year tax-free income. Maybe that even covers your mortgage right there. So 14 days rented out total, IRS's blessing with it. Excuse me. Now, this can play a double role if you own a business and maybe need some more tax deductions. Now, you want to work with a certified accountant, work with your CPA that's knowledgeable about this area of the tax code, make sure that everything's legit, I's are dotted, T's are crossed, and can stand up to scrutiny with the IRS if you were ever audited, because you want this income tax-free. You don't want to have to pay taxes and penalties on it. So we're going to talk about this where, as a business owner, you receive $7,000 tax-free. Now, maybe your business here, you've had a banner year. It gets to October, November, December. Now, granted, typically the way businesses here in the United States work, you have your gross income, you subtract your expenses, whatever the net income, it might have some depreciation and other write-offs in there. Whatever your net income is, typically you're going to pay, 21% federal tax rate on that. So let's say at the end of the year, Mr. Business Owner or Mrs. Business Owner, you had a really good year. As of right now, you're going to be owing a fair amount of taxes. Let's see if we can get some tax deductions in. And maybe the first thing you think is, well, I don't know, can I buy a new car? Can I buy a new laptop for the business? Can I buy some more equipment? Can I buy some supplies? Can I, whatever, go on a shopping spree with Quill and stockpile on office supplies I'm going to need for the next 3 years and get my taxable income on my business as low as possible. But here's a way to kind of essentially shift money and get a write-off and tax-free income at the same time. Your business rents your primary home up to 14 days for, weekend meetings, getaways, business meetings. I want to make sure that you're keeping minutes for your corporation. Many businesses do retreats at, exotic places, and they have to keep the threshold of, 4 hours and 1 minute of a workday is business related. So again, you want to work with a qualified CPA or accountant or tax advisor with this. But for a business, and this is where you need to do a little bit more due diligence. Let's say you research the short-term rental markets. Let's say you contract out with a number of hotels. Say, what would it cost to rent out the conference room and 2 rooms for a business venture, or the conference room and the meal room, or a suite with the kitchen? Or basically you want to see what is a comparable that my primary residence offers that would be comparable if I were to rent somewhere else, and how much would that cost? So let's say you reach out to a couple, I don't know, bed and breakfasts, maybe some business ventures. Obviously this is going to be very, very market dependent, but for round numbers, let's just say I've done due diligence. I can show with proper documentation that a business can rent out a similar property, venue, operation like my primary residence for $1,000 per day. Not too out of range, especially like I said, with some markets. So $1,000 per day times 14 days comes to $14,000. So what does this mean? So the business has a write-off of $14,000. So let's just say, for example's sake, your net taxable income for your business just so happened to be $14,000. Rounding here a little bit, okay, $14,000 net taxable income. That is after all the other deductions I've had in play. $14,000, we'll just say round numbers, 20%, comes to $2,800 that I would have to pay Uncle Sam for my business. Well, instead of paying that to Uncle Sam, I'm going to pay that $14,000 and rent out my primary residence for a collection of business meetings. Essentially, it has to be for a business purpose. Big thing, documentation. You want to make sure that this passes the sniff test, so to speak, that if you were to get audited, that this would stand up to the IRS scrutiny and say, yep, this crosses all the T's, this dots all the I's. This is in compliance with the IRS tax code as it is written now. Again, work with a CPA. I am not a CPA. This is just a trick that I've learned. So we have $14,000 that your business pays you to rent out your primary home. As we discussed here, you yourself gets $14,000 tax-free. No federal income tax, no FICA taxes. Your business, and like I said, for an extreme example, it just so happened that after all deductions currently for the year, there was a net income of the business of $14,000, which would be about $3,000 in taxes to Uncle Sam. Instead, I'm going to pay that $14,000 to rent out my primary home. $14,000 deduction for the business. Zero taxable income or business income that is taxable. So let's see, 21% of zero, hey, $0. So just saved about $3,000 in taxes on my business. Went to my primary residence. I took $14,000 or whatever the number is. The critical component is it did not exceed 14 days in a year. 14 days times $1,000 that we had given as an example, $14,000 tax-free, no taxes in your personal pocket, about $3,000 saved from your business tax pocket. So again, I'm not a tax advisor. I couldn't tell you what section of the tax code this is, but this is a legal loophole that as of this recording, April of 2022, is legal, is blessed by the IRS, and can be a, shall we say, a quick and easy way to utilize your primary residence to get some additional income tax-free and possibly some additional income tax-free with the blessing of the government that gives you a tax write-off of your business to thus pay less taxes to Uncle Sam. Hope you enjoyed today's lesson. Feel free to hit that subscribe button and stay tuned for lesson or option number 6 of how to get started in real estate investing.